Hello everyone, welcome back to the channel. Today we're doing a deep dive into Micron Technology's upcoming fiscal fourth quarter earnings release scheduled for September 23rd, 2025. Whether you're a long-term investor or a trader looking for short-term opportunities, this episode is for you. We'll cover expectations, key risks, market drivers, and possible trading setups going into the release. Micron has been in the spotlight recently with strong demand for memory chips, especially in artificial intelligence and data centers, shifting pricing dynamics and upgraded guidance. All of that makes this earnings report likely to trigger meaningful volatility. Let's get into the numbers. Back in August, Micron updated its guidance for the quarter. Revenue was raised to about $11.2 billion. Non-GAAP gross margin is guided to roughly 44.5%, and non-GAAP earnings per share are guided to around $2.85. Analyst consensus is largely in line with this update, expecting revenue around $11.1 to $11.2 billion and earnings per share near $2.85. That means the market has already priced in fairly strong results. The big question is whether Micron can deliver even more or signal upside in its outlook for the next quarter. What's fueling Micron's growth? First, artificial intelligence and data center demand. Memory chips like DRAM, NAND, and high bandwidth memory are critical for AI infrastructure. Supply remains limited, giving Micron pricing power. Second, pricing for DRAM and NAND has improved significantly, boosting margins. Third, overall supply tightness in advanced memory products may continue supporting profitability, but there are risks. Competition from Samsung and SK Hynix could lead to oversupply. Consumer and PC demand remains weak, which could offset strength in AI. Inventory buildups are always a risk in memory markets, and policy or trade restrictions could create cost pressure. Most importantly, forward guidance will drive the stock reaction even more than the reported quarter. Looking back, Micron delivered revenue of about $9.3 billion in the third quarter, well ahead of the prior year, and non-GAAP earnings of $1.91 per share, beating expectations. Gross margins improved, and AI-related revenue grew sharply. Historically, Micron tends to outperform when demand trends are favorable, but the stock reacts strongly in both directions depending on guidance. For this upcoming report, the most important metrics to watch are revenue compared to the raised guidance, earnings per share relative to consensus, gross margin trends, and commentary on DRAM, NAND, and high bandwidth memory pricing. Pay attention to data center and AI revenue, inventory levels, and especially forward guidance. These factors are likely to dictate the market's response. How can traders position around this? There are several approaches. Some may choose a pre-earnings setup, buying in anticipation of a beat. Others might consider straddles or strangles with options to capture a large move in either direction. Post-earnings, traders can look for breakout or fade opportunities depending on the stock's reaction. Key technical levels to watch include support zones established in recent pullbacks and resistance levels near prior highs. Expect higher than usual volatility and volume. Manage risk carefully with position sizing and stop losses, and remember that after-hours moves can be sharp and unpredictable. To wrap up, Micron enters September 23rd earnings with momentum, raised guidance, strong AI-driven demand, and favorable pricing trends. But competition, weak consumer markets, and the tone of forward guidance remain critical risks. My base case is that Micron will likely meet or slightly beat current expectations. For traders, strategies that allow for both upside and downside, such as options or small positions with tight risk management, make sense. If the stock makes a strong move after earnings, wait for confirmation or a pullback before committing further capital. Thanks for watching and good luck with your trades.